Hey everyone, welcome back to another market closing live stream. So today we have earnings again, which means we're going to cover the earnings live, so we always do, and get some instant reaction to some of the earnings that come in today. Today is Wednesday, April 27th, and we've got big ones including Facebook, Ford, PayPal, Qualcomm, Pinterest, Tdoc, Upwork, ServiceNow, Amgen, Mattel, Las Vegas Sands, Lending Club, O'Reilly Automotive, and the Cheesecake Factory, with a few others. This is big, including even Netgear today. So a pretty wild day of earnings coming ahead. In addition to a wild day of earnings coming ahead, what a freaking crap show of a market! We just can't keep it up. Look at this. This is the QQQ right here. We had a rally coming out of the open, a crash right after that. This is obviously the minute candlestick set here. If we go out to the 30-minute candlestick, you could just see that the day has been a fight to stay either at or above, or even just slightly below that 0% Fibonacci. Right now, we are below. We're just now turning red on the NASDAQ 100. SPY is still up at the moment, 1/3 of 1%, bouncing off that almost bouncing off that 0% fib line, and face up 7.5. Tesla bouncing around that 880 level again, and this is about up 0.5%. We were up as much as 3 to 4% earlier in the day, but that has been given back immediately. Rough market right now, and we've got the suits on Wall Street running headlines like the following. The Federal Reserve is in the process of seriously tightening financial conditions for the first time in years. Arguably, you have to go back to the early 2000s for such an episode, and charts of the S&P 500 tell you not to expect much. Tighter financial conditions means back to the 2000s is the headline. Now, I'll give you, let me see if I can pull up that range-bound chart, because it's kind of interesting. So we'll pull that up in just a second here. But basically, more of the classic volatility of what goes up ends up coming down. It doesn't have to, but it does. Take a look at this, folks. This is the Fed funds rate with an overlay of the S&P 500. And what you'll notice is the increase of the Fed funds rate there, and the dot-com bubble on the left really helped drive stocks down until, of course, we had a tightening or a loosening of the Fed funds policy. And when we bottomed out, that's actually when stocks started moving up again, until, of course, the recession in 2008, which hopefully we're not heading back to those sorts of maddening levels. We have about 2.5 minutes to go before the closing bell, and an insane amount of earnings. Volatility is the name of the game right now. We've got, let's see here. What is this? Oh, interesting. Okay. So a little bit here on Brazil and oil. Oil set to rise if Russia bans oil imports to Europe. Right now, we've got oil preempting this slightly. Oil up at 102 for WTI. It's the American version, and 105 for Brent. Bond market right now actually slightly tightening again. Yesterday, it almost felt like we had some short covering. We went all the way down to a 10-year of 2.74, sitting at about 2.816 right now. If we dive into the 10-2 curve, just to get a little bit of an idea how we're going into the close, about 90 seconds left before we get into earnings. We have the 10-2 sitting at a spread of still about 22.5 basis points. Pretty stable there. It's pretty close to that inversion. Obviously, it's uninverted, but it has steepened a little bit. You do have the 5-year break-even rate just ticked up again a little bit to 3.3, but still substantially lower than where we had been between late February, March, and early April. We've seen these numbers come down a lot. That's about Trade Desk. Love Trade Desk. Do you think there's an opportunity in supply chain companies, as there has been so much focus on needing to revamp the supply chains? Well, remember that the way the market tends to trade is that usually you get a lot of movement into supply chain companies when it's a safety trade. But when the reality comes through and they actually start improving supply chains, people may have already moved out of those trades into other safety trades. You know, you look at something like a Zim in terms of shipping and distribution and logistics. You know, their stock has come under substantial pressure just here within the last month or two. as you get a little bit of that flight to safety pulling out of there and moving into other stocks or whether that's commodities or to some degree into bonds, which rallied yesterday. Who knows? All right, let's go ahead and get the bell, and then let's hit earnings.
Technology remains strong, some rebound there in some of those names, but communication services under a ton of pressure off Alphabet and Meta. Real estate, utilities, financials, healthcare, now all lower. The NASDAQ goes positive at the close, just barely. Small caps underperform again, down 1/3%. That's it for me on Closing Bell. Have a good evening. I'll now send it into overtime with Scott Wapner.
There you have it. You know, I really wish they would go back to where Sarah actually gives you the read off of the final sort of closing amounts. But anyway, Dow ended up 0.19%, S&P up 0.21%, NASDAQ down 0.01%, and the Russell 2000 down 0.17%. Let's listen in here for a moment, and then we've got big earnings coming up, which we're going to cover in just a moment.
And others hitting any second. We'll get to them, and of course, we'll show you the immediate stock reaction across the board. Our experts are here as well. Halftime's Josh Brown, the CEO of Ritholtz Wealth Management. SoFi's Liz Young. And with me right here.
They're really advertising SoFi. I wonder how much they have to pay to get on there. It's all about money, folks. Okay, so we are getting, right now I'm pulling up earnings for Facebook, Ford. I'm pulling up earnings for PayPal. Wow, Qualcomm as well. I forgot about that one. Today is a very big earnings day. We're going to have a lot of earnings calls to go through later in the day. So make sure to come back later and watch those earnings calls. If you have not yet, make sure to also watch the video that I posted earlier about an inflection point. It's really interesting on how companies are pricing in inflation and what some of the earnings calls from yesterday have done. Very, very good leading tells of what to expect going forward. Pinterest, it's going to be quite fascinating today because we're going to get a little bit of a tell about our consumer. Remember what Visa told us. Visa told us that the consumer is still spending on e-com. So quite interested to see if we can get a rebound on Pinterest. I would expect a substantial potential movement in Pinterest either direction, just because it's come under so much pressure for quite frankly the last year or more. It's just been straight down. So it's been a painful stock. It's unfortunate. Okay, so waiting now. Okay, Qualcomm just in. Qualcomm comes in with a beat on revenue, adjusted revenue, beat on EPS. It's a double beat. That let's see here. That is 3.23 cents for Qualcomm. It's up about 6% in the after hours right now versus 293 expected. The forecast, folks, let's go. This is going to be good for NVIDIA as well. The forecast coming in at 10.5 to 11.3. That's a midpoint of somewhere around somewhere around 10.9 as the midpoint. That's almost $1 billion more than the estimate for Q3 revenue. Folks, that is very good. Very, very good. Okay, Amgen reports a beat. Adjusted EPS coming in at 425 versus 409 expected. Operating income coming in about $150 million greater than expected. Revenue coming in about $100 million more than expected at $6.2 billion. So that's a beat on revenue. It's a beat on bottom line at Amgen as well. Big beat, though, at Qualcomm. They're up about 5% in the after hours. If we jump on over to Amgen, we see Amgen up about 2%. But good moves there on Qualcomm, probably motivating as well for NVIDIA. Some of maybe even AMD. Nothing yet. Tdoc pins. Amgen, we just reported. Upwork waiting. ServiceNow. Let's see what else we can get. Let's get Mattel. That's going to tell us a little bit about the consumer as well. Las Vegas Sands. That'll be a big consumer play. We need the consumer to spend money. I don't care if it's on goods. I don't care if it's on services. I just want people to buy stuff so that way we don't go into a recession. Of course, if you are looking for something to buy, you can always check out the programs on Building Your Wealth link down below, or our amazing sponsor, which is StreamYard, on metkevin.com/StreamYard. So you too can throw comments up on your multi-streamed live streams like Drew over here, Spice Closed Green, woo, and multi-stream to different platforms. Okay, waiting for Las Vegas Sands, waiting for Facebook, waiting on PayPal, waiting on Ford, Qualcomm. Yep, good beat on Qual. That was great. Pinterest beats estimates. Monthly active users down 9%. Pinterest lost $5 million in the quarter. Holy crap. Their adjusted EBITDA was expected to be $24 million. It came in at 77. Revenue per user up at $1.33 in revenue per user per quarter, up from 1.31 expected. EPS adjusted coming in at 10 cents versus 2.7 estimated, but monthly active users down about 3.3 million. Forecast Q2 revenue for Pinterest expected to be up 11%. Pinterest now moving about 7 to 8% in the after hours here. Jumped as much as 12% just for a moment there. This stock has come under substantial pressure. I mean, look at the day chart here for Pinterest. And that monthly active user decline, even though we got a couple more pennies on expectations for revenue per user, probably not going to be enough to actually keep this stock up for long. I would expect some institutional selling in the morning to get some potential profit out of there. I don't know who's making a profit on Pinterest right now, but Tdoc beats 54.5 million versus 53 in adjusted EBITDA. That is a beat on a bottom line, but revenue misses. Wait, EBITDA loss? No, that doesn't say loss. It says adjusted EBITDA. I've got a little bit. It looks like the loss per share. Oh, no, here we go. Okay. All right. I see. Okay, their EBITDA beat, but their actual loss per share came in greater than expected. Okay. Little mix there. So TBD how that stock reacts. Waiting for ServiceNow, waiting for Facebook, just in. Facebook, ad Q1 impressions up 15%. Q2 revenue, a miss on guide. A miss of about $2 billion on guide. Average price per ad down 8% versus 4.1% of a loss expected. This is bad. I don't know how the shares are going up 10% right now, but this is actually not good. Monthly active users came in at 2.94 versus estimates of 2.95. Daily active users came in at 1.96, a little bit higher than the 1.94. Maybe markets were just expecting more of a loss here. Ad impressions up is good, but average price per ad down 8%, not so great. Less advertising competition in such a case, right? But daily active users exceeded estimates. Monthly active users missed. Pinterest now up about 13%. Qualcomm only up about 4%. Facebook up 8% on this news. Really surprising because these earnings aren't actually that great. Foreign exchange to be a 3% headwind. Ford EPS comes in at 38 cents. Suggests that demand is strong, but supplies are limiting part shipments. Affirms full year guidance. You've got automotive revenue of 32.1 billion versus 31.24. That's a beat. So let's take a look at Ford. Ford's up about 1.15. Most of these stocks are actually going up here on these earnings. PayPal is going to be the next big one. Qualcomm, let's see, we got a little bit more detail here. Did we? No. Oh, okay, so yeah, Qualcomm we did like. Pinterest sees Q2 revenue up 11%. Pinterest reports monthly active users down 9%. Teladoc drops 13% after that bottom line miss. That one was a little confusing. So Tdoc actually missing or plummeting now 13%. Looking for Las Vegas Sands, looking for Mattel. Mattel is out. Mattel sees fiscal year net sales up 8 to 10%. People still spending money. Mattel. Jeez, man, how do people keep spending all this money? Okay, waiting for a little bit more news to come in here on Mattel. While we wait for that, let's go to, Q1 sales 1.04 billion. Gross margin beats 46.6%. Estimate was 44%. Adjusted EPS comes in at 8 cents. They were expecting a loss of 3 cents. Fiscal year CapEx expected to come in roughly in line with estimates. Adjusted EBITDA for the full year, raising guidance for the full year. Everybody's worried about a freaking recession, and here you go. Mattel raising guidance. Qualcomm raising guidance. People still on Pinterest, still seeing growth at Pinterest, which is crazy. Still no PayPal, though. Facebook not seeing any kind of crazy user exodus. The users are still there. Facebook or Ford losing. For China lost before interest. Estimated loss 32.9 bill. Automotive revenue, beat over at Ford. Okay, and I mean, they are profitable. Okay, Upwork shares climb 12% after their earnings. I do not have a breakdown of their earnings, but it is moving up about 12%. That was actually a classic stay-at-home play that has gotten really beat up. So it's good to see them move. Still waiting for Las Vegas Sands. Waiting for Cheesecake Factory. Waiting for PayPal. Facebook's forecast, remember, missed estimates. Okay, PayPal, waiting for PayPal. Let me see what time PayPal is. PayPal should be out in about 4 minutes. That's going to be a big one. We're going to see those transactions. We'll have a little bit of an idea about how they compare to Visa in terms of luxury buyers. We'll have an idea about how they maybe can lead buy now, pay later. How's buy now, pay later been? ServiceNow beats adjusted EPS 173 versus 170. Q1 rev 172 billion versus the estimate of $1.7 billion. That's about a $20 million beat with 3 cents on adjusted EPS. ServiceNow. Good job. Take a look at Ford. Ford's candlestick's moving very nicely. It's actually up only about 2%. Holy crap. Look at Pinterest. Let's go. I hope this sets up for a green day tomorrow, folks. This is really, really good. I really want to see that, like a risk-on trend here. I mean, if Pinterest can bump 17% and go back to $21. I mean, folks, we went all the way back to April 22nd's pricing here 5 days ago, okay? So like this is where we went back to. $21. Where is it? $21.79. Right there. There we go. That's where we went back to, folks. Woo! Jeez, man. This, like, if you're in pins, and I was in pins, okay? I got nipped on pins too. I'm not in pins right now, but I'm just saying, I'm happy, but like I feel for you. Like this, it sucks. This market just sucks. So it's just a crap market. But I will say, and I was talking about that this morning, that I've been working on putting together sort of a presentation that we're going to talk first about in the course member live stream about e-commerce companies and a lot of companies that have really gotten burned in valuations, and potentially diversifying some of my Tesla, especially if Tesla, recovers after this whole like Elon selling thesis, potentially diversifying a little bit of my Tesla into some of these really beat up names, because I can establish positions very inexpensively. So TBD on that. That's not a guarantee yet, but of course, if you want to be involved in even just those discussions, check out those programs on Building Your Wealth down below. I really think you'll appreciate what you have or what you get there. Really, my goal is to just make news easy for you, and a lot of people come with ideas and opinions and questions or what they're looking for in the course member lives, where we can spend a lot more time answering questions. It's worth noting that in our course, actually, this was in the public live stream this morning. Someone gave the course a shout out. They shouted out, been trading for the last few months from info from your courses, making more than my full-time job now. I thought that was really cool. See, like, I don't necessarily trade all day, every day, right? But I do spend time looking for the catalysts and getting the news. And I love bringing that to y'all. So, okay, we are now waiting for PayPal, which should be out in about 90 seconds. Come on, PayPal. We really want to see those numbers. Looking for also Cheesecake. I think Cheesecake might be later in the day, though. No, Cheesecake's also 4:15. O'Reilly waiting. And now we're waiting for Las Vegas Sands. Oh, wow. Tdoc is down 19%. Is that true right now? Let's see here. Tdoc is a company that I've many times on live streams with course members been talking about. It's just not a company that I'm super interested in, and mostly because it's an unprofitable company right now, and it's a company that is clearly a stay-at-home momentum play. But that is going to hurt ARK Invest, an 18% drop. I'm pretty sure Tdoc is one of their largest positions. Let's go to Kathy's ARK. Oh my gosh. How much did Tdoc burn this quarter? Yeah, well, that's a good question. I'll pull it up. Actually, I will tell you. Let me see individual company news. I didn't even have Tdoc up. Tdoc, loss per share of $41. What? What? Dude, how do you lose $41 a share? The shares are worth $55. What? They lost $6.67 billion? Adjusted EBITDA, $54.5 million in the quarter. How do you lose $6.6 billion? And your adjusted EBITDA was $54 million. What? Holy crap. Oh my gosh. That's insane, dude. Yeah, Tdoc is the third largest position in Kathy's fund. It is right there. Weight. ARK ownership, 7% of the company. Weight in their ETF, I think this is overall. No, this is RK. In RK, they're at a 6.89% weight. Market value of $652 million. If we go to combined, Tdoc is now, holy crap, they have $1 billion in Tdoc. Folks, if you're in Tdoc and you feel sad that it just went down 18%, they just lost $180 million, nearly $200 million. That's crazy. PayPal, slight beat. EPS at estimate. Revenue, slight beat. 6.48 versus 6.4 expected. Holy crap. That's really good. The consumer, let's go. Because look at PayPal's chart. PayPal's just been... PayPal is like the only sold put I've ever gotten burned on, okay? Like, it's hard to get burned on sold puts unless you buy them in PayPal. Because look at the damn chart. Like, it's like 0% fib. Watch me. Watch me, bitch. I'm going to storm right through your line. God. I'm joking. PayPal Q1 total payment volume 322.98 billion. The estimate was 323.13. Slight miss on payment volume. Current spot rates for Rev 2, not sure what this is regarding. 9% versus the estimate of 13.6. These are mixed results here. The net revenue was about an $80 million beat. EPS at expectations, but so I mean it's not a bad earnings report, but it's a little messy. Yeah, okay, forecast. Oh, the forecast is bad. No. 3.81 to 3.9. That's a midpoint of what is that? 3.86. 3.86 is a midpoint. Their expectation was 4.68. That's an 80-cent miss on EPS, which is big. That's like a 20% EPS forecast miss. That's bad. That's going to weigh on them. I don't know why they're forecasting so low for the year. That is going to be a really important earnings call to watch. On the other hand, Cheesecake. Q1 restaurant comps up 20.7%. The estimate was 20%. However, adjusted EPS misses 47 cents versus 51 expectations. Cheesecake Factory. Good on comps, bad on net. That's mixed. Cheesecake kind of flattish. TBD here, TBD. Oh, man. PayPal. What's PayPal? Let's see. PYPL. Trying to figure out which way to go over here. Holy crap. Look at Tdoc. Oh, my gosh. The God Pill says Mullen is the only play. It's like the new AMC. It's barcoding. Oh, look at that perfect bounce on this. Well, I must have drawn it to that 0. Yeah. But it did perfectly bounce off the 23.6 over here. This is a trader stock. Momentum plays. Okay, wow. Those are some crazy. Oh, my goodness. Facebook up 12%. Because of Q1 profit and daily users topping estimates. Mark Zuckerberg says Meta is making progress. Slowest quarterly revenue growth in 10 years, though. Slowest quarterly revenue growth in 10 years, but up 9%. And the Q2 guide was not good. The Q2 guide missed. It's still up, though. I guess the miss wasn't as bad as expected, so it's actually doing quite well. Pinterest up 10.8%, Upwork up, EXPI up about 5, Tesla up about 0.62 in the afters. Folks, Tdoc is absolutely getting extinguished. I honestly do not, I feel like this is a typo. How can you lose almost the same amount of the actual value of the shares in earnings per share? Like, am I wrong for thinking that's weird? Like, I don't know if I've seen that before. How do you lose $41 per share? Look at that. The stock right now is trading for $39. They literally lost more money than the shares themselves are worth. What? I mean, I know the shares are, it's share price times shares outstanding and you get a market cap. It's just, it seems weird. I suppose you could have, you could do like a reverse split, right? Like, let's say you did a reverse 10-for-1 split just to think about it. Then in theory, each share would be worth $500, right? And then it wouldn't seem that bad because it's like, well, we only lost. Well, no, because then the share count would be, because then you'd have 10 times fewer shares. You'd still be losing. Then you'd be losing $400 per share. It'd still be bad. No, it'd still be bad no matter how you slice it. It doesn't matter how you slice it. It's terrible. See how we're like doing that like math together? Anyway, that's a disaster. Tdoc paid $18.5 billion to acquire Live and Go. Now their market cap is half that. Wow. Quick calculation. ARK just lost $2 billion in Tdoc in the last 20 minutes. I think 200 million. Because the market cap of their investment is about $1 billion. So it'd be about, actually now probably at 30% down, probably about 300 million. Oh, wow. Your thoughts on Roku earnings tomorrow? Gaming earnings have not been good. Ooh, Mattel shares jump as retail restocking drives Q1 beats. Yeah, look into Activision. Their big Call of Duty miss is a big red flag. Oh, yeah, let's look at Mattel. Sales rising 8 to 10%. Oh, I think I remember saying that. Oh, yeah, I think I did. I remember looking at this margin and stuff. That's right. So, yeah, so Mattel's rising. Wow. Mattel sees forward 1 year adjusted EPS of at least $1.90, but the consensus was $1.85. And you know why they blew past earnings estimates? Listen to this. Retailers are loading up on Barbies and Hot Wheels because the freaking consumer keeps buying damn crap. There's no recession, man. There's no recession. Now, who knows? Maybe it'll all change. But I'm telling you, man, every one of these earnings reports so far, it's like there's no recession. Like this is right here is what we're experiencing. Look on screen right now. That is what you're experiencing. On the left, the economy was on fire. The stock market was happy. Now the economy is booming and the stock market is on fire. That's what you got. You got a bunch of weenie baby institutions. This is the opposite of what I thought was going to happen. I said in January, I think the consumer is going to go, F this, I'm going to stop spending money. Watch my videos. It's fully transparent. People are like, well, why did you sell? And why did you buy back in? Have you not watched a single video of mine over the last 4 months? That doesn't mean I'm perfect. But I think, this is crazy. Like, these are not recessionary earnings reports. These are phenomenal earning reports. Marquita and Affirm are the dark horse in the digital payment section. Yeah, probably. ARK is capsizing. Oh my gosh. But yeah, so Tdoc, not Tdoc, Roku. Look, I don't play earnings. A lot of people like to play earnings based off the stuff I talk about, which is fine with me. I mean, look, we talked about how I thought there was good news coming for Enphase because of what they told us in the last earnings report, right? but I also do follow Interface quite closely, and that ended up being correct. I don't like options though because they price in too much of those. Better almost to play with shares if you're going to do it, but it depends what you do, you know. But anyway, Roku. I don't know. I mean, I could give you what the estimate is for Roku. Let's see here. Roku. The estimate for this is a problem, folks. The estimate for Q1 is that they'll have revenue of 720 million, but that their net income will be negative 26.8 million with a loss per share of about 20.4 cents adjusted. You know, so here you still have a money losing business. The implied volatility is 20%. You can't make money on options when the implied volatility is 20%. You can't. You just can't. Like there's no way. It would have to move 20%, it would have to move 25, 30% in your favor for you to start making money. That doesn't make sense. Cheesecake. Yeah, we saw the miss on Cheesecake. Las Vegas Sands. Oh, okay. Some NFT problems with Las Vegas Sands. Las Vegas. Did we get earnings yet? Yeah, we did. Here we go. Las Vegas Sands adjusted property EBITDA comes in at 110 million versus 212 estimated. That's terrible. Net revenue 943 versus 1.8 expected. What happened? This is horrible. It says travel restrictions continue to limit visitation. Okay, is this because of China, like Macau region? Because that's not what's happening in America. That's an important earnings call to look at for where this decline is happening. Las Vegas Sands is only down 2.4%, so it's got to be China, which that would be priced in mostly. It's still a miss, but that would make sense. Let me see if I can. Tdoc, check the goodwill impairment charge. Okay, I'll do that. Macau properties, consensus. Okay, yeah, Macau, Venetian Macau down 18%, Londoner Macau down 28%, Parisian Macau down 33%, Plaza Macau down 14%, Sands Macau down 30%, Singapore up 38%. Wow. Interesting. Where are the other ones? Macau properties. Let's see if I can find it. Yeah, I can't find the Vegas ones. You'd think they'd be right there. Well, they do break them down by individual assets as well. That's pretty cool. Yeah, you can see exactly the revenue of the individual properties and everything. Oh, okay. Well, I'll look into that a little bit more. But yeah, that's interesting. So, okay, Tdoc. All right, so let's see here. Tdoc is this disaster right here. This is like just terrible. Okay, so let me see here. Net loss per share. I don't understand the 6.6 billion. Yeah, I mean, it would make sense that maybe something weird happened there because that just, you can't run a business like that. So, okay, goodwill impairment. Oh, wow, yeah, there it is. 6.6 billion in goodwill impairment. Why? I mean, that implies that some sort of intellectual property that they bought is actually worth substantially less. Goodwill impairment, 6.6 billion. Wow, dude. Come on, man. It's terrible. Current liabilities, 1.5 bill. Cash of about 836 mil. Current assets, 1.2 bill. Okay. So what the F? Yeah, let's figure it out together. Disaster, man. What a disaster. Tdoc. Let me see if we can get an explanation over here. Obviously, we'll get it on the earnings call. All right. But let's see if we can get it over here in their press release. Primarily driven by non-cash Impairment charge. Why? Impairment losses with respect to goodwill, like the value of their brand. Goodwill impairment, goodwill impairment. Where's the goodwill impairment? For what? The individual reconciling items such as goodwill impairment. They didn't even say. Come on, man. You're not even going to give us I mean, like, obviously the actual filing is going to have it, but do we have their filing yet? Yeah, we do. Why? This is stupid. What? Where is it? Dude, they don't tell you what it is. You got to be freaking kidding me. Yeah, it's probably this, what Varun here says. Paying 3 times their current market cap to acquire Livongo. But why would you not say something in the SEC report? You know, so in other words, they were pumping up their balance sheet with goodwill that doesn't exist. And so now their assets. This is why, by the way, when I do balance sheets, I don't even give goodwill value. I take that crap out. I'm like, that's some bull crap. You're just pumping up your balance sheet to make it look better. That's some shady accounting almost. See right here. Look at that. Look at that. Their goodwill at the end of last year was listed at $14.5 billion. Now they're saying, nah, our goodwill's only worth about $8 billion. What's going to happen next quarter? Another $3 billion off the goodwill? I don't know. Maybe I just sound jaded, but like, you know, I would have liked like a management note like, hey, just FYI, the reason we took this impairment charge is because of Livongo. You know, we bought it in 2021 before the Fed tightening cycle. Now we're recognizing an impairment charge because obviously the market has shifted and we want it to better reflect what we believe the true market value of that business is. Just frickin' say that. But the fact that that's not in the filing and not in the press release, like, really? You're just going to lay a $6.6 billion charge on us without telling us what it's for? Lame. Lame. Write intangible and a big number and no one will notice. A lot of these, like, those, see, that's the kind, I would never invest in Tdoc now with that kind of management. Like, you're all are straight up assholes for not being clear about this. Just dumb. You just can't trust them. Okay. Okay. So this is not so great. What's this PayPal thing here? So this is interesting. PayPal cuts annual profit view as macroeconomic challenges rise. PayPal shares up about 2% now, it says, but PayPal is pleased with results that exceeded guidance, but that full year revenue is bad. The full year EPS is about 80 cents less than expected at $3 and about 85 cents per share versus the 462 expected. It's not good. They added 2.4 million new active accounts in Q1. Yeah, so we'll have to wait for the earnings call on that. But that full year guidance isn't good for PayPal. Ford lost $3.1 billion this quarter, attributed to the valuation of the investment in Rivian. Ford takes a $3.1 billion write-off on Rivian. Amazon's going to have the same problem. Amazon's going to have the same problem. Wow. Wow. PayPal, Qualcomm. PayPal or Tdoc just cut revenue forecast as well. 2.4 to 2.5 billion, was expecting 2.55 to 2.65. Amgen falls. Upwork is rallying. Mattel's doing well as businesses are stocking up, getting more of that inventory. Cheesecake is resuming their share purchases. Las Vegas Sands misses what appears to be mostly on Macau. What a mess. What a mess. Okay, O'Reilly. Oh yeah, I can look at those. Let's see. Kevin, didn't you sell because the Fed was not our friend? Doesn't a strong consumer give the Fed more reason not to be a friend? Yes, and yes, and yes. That is a triple yes and correct all across the board. Sold because the Fed wasn't our friend, although there's a whole lot more in that. My expectation was we were going to have the Fed that wasn't going to be our friend and a weak consumer. Even though a strong consumer gives the Fed more ammo, it means underlying earnings are likely to still remain strong, and that recession everybody's worried about is unlikely to actually come to fruition, which just makes now a buying opportunity. Now, the Fed has been pretty mean to us. The Fed implied they were going to be a little bit more chill and be patient and consistent with rate hikes. And now all the talk is about, well, we're going to do 50 a couple times, right? The 50 BP. So the Fed's been very difficult to read, very aggressive. I don't really think they know what they're doing. I think they're kind of playing it by ear, which is very frustrating and hard to predict. But because I believe the consumer is so strong, I'm not betting on really so much the Fed as I am betting on no recession and a long-term recovery. But that is going to mean riding some pretty insane waves for a while. Hopefully that is a good explanation for you. Yeah, Facebook, slowest growth in a decade. Oh yeah, O'Reilly. Let's look at O'Reilly Auto Parts. Yeah, great question. Agreed. No, market pricing in 50. Remember, we're at 0.25 to 50 right now. So the next range you would see would be 0.5 to 0.75. That's maybe where you're seeing the 0.75. PayPal margins got crushed, says someone here. Yeah, I know their forecast wasn't great. I wanna see that though. Here, I'm gonna pull up the 8K. Okay, so that does me no good. All right, I'll come back to PayPal in just a sec. Let me get the news for O'Reilly, and then I'll do PayPal. Okay, so O'Reilly sees free cash flow 1.3 billion to 1.6. That misses the estimates. CapEx spending misses estimates. Fiscal year EPS is lower by about $1, 75 cents to $1. Gross profit margin comes in at 50.8% versus 51.3 expected. Comp sales 4.8 versus 5.36 expected, so that's a miss. Revenue guiding roughly in line. Comp sales to be between 5 and 7%. That's in line with expectations. CFO transition plan. Q1 EPS comes in at 717, misses the 748 estimate. So little misses there. I want to see whether a lot of these companies, they blame the supply chain issues, not the consumer. So we'll have to see, but they're down about 4% now. Yes, I did say that. I did say that good earnings equal bad news in January. And that is true because we believed that earnings were going to be very, very good in Q4. But you can watch my videos. I say this. I thought earnings were going to be terrible in Q4 and that everything's going to be on guidance for Q1. And we thought that in Q1, the consumer would spend less money. But they didn't. They spent more. So, it's crazy. It's crazy how, I mean, at least if you make expectations, you could pay attention to see how things are changing, right? Some people make no predictions, and then it's just like, oh, no idea. I have no idea at all. Okay. So that was O'Reilly, and then we were going to look at PayPal really quick. Golly, geez, man. Okay, O'Reilly now down about 8%. Yikes. Tdoc down roughly 33 now. It's rebounding a little bit. Tdoc is bouncing off the floor a little bit. Okay, PayPal results. So we've gone through the PayPal results, but we're gonna look for margin here. Okay, total processing volume surpassing 1.4 trillion, expecting to grow. Obviously not as much as people were expecting. Yeah. Operating income down. Operating cash flow. Operating cash flow down a lot. Free cash flow down a lot. Net revenues up. So why are their margins getting beat? Payment transactions per account growing 11%. Strong balance sheet, strategic. Okay. Margin. Oh, wow. Look at that crush. 630 basis point crush on operating margin. What the heck? Why? Primarily representing stock-based compensation. I mean, that's a lot of. Wow, really? Okay, disclosures. Wow. Well, it'll be really interesting to see what happens there in the earnings call. But yeah, look at this. So if you look at the income statement, you see here their income was 6.4 versus 6 billion. That's higher, right? But then you go over here at operating, where is it? Operating income. Their operating income was only 711 versus a billion. So their overall income went up, but their operating income went down. It's going in opposite directions here. Transaction expense blew up like $600 million. What happened there? That's not stock-based comp. Yeah, something went weird there. Transaction expense. That expense rate hasn't changed. Nope. No details here. So we'll have to see in the earnings call. Wow. Crazy earnings, folks. Crazy earnings. Okay, Tdoc rebounding a little bit. And still down about 33% though. Facebook up 14% on that daily active users info. What an earnings sesh here. Stay tuned later for a report on the actual earnings calls. When after those occur, I'll break down the transcripts. I'm excited to share them with you, so stay subscribed. If you're not getting all of the notifications, go type in Meet Kevin in the App Store and download the app and turn notifications on. You will get every notification then, so that way when I go live or there are videos, you won't miss them. And then, of course, thank you so much to StreamYard for sponsoring today's video. Go to metkevin.com/StreamYard to learn more. All right, folks. We'll see you in the next one. Goodbye.